If you are still having problems or trouble passing prop firm evaluations, getting into the funded stage and taking payouts, this is a video that you're going to want to sit back, relax, listen to. Maybe you take something away from this that's going to help you on your journey with these prop firm evaluations and these funded accounts. My name is D. Anthony with Evolution Traders. I teach how to trade the markets better, how to be a little bit more realistic, how to build a trading plan, how to implement good risk management, how to use different strategies. I'm a full-time options trader as well as prop firm funded futures trader. With that out of the way, one of the big problems that I see a lot of traders have is they think that they can jump into some of these evaluations, pass very, very quickly. Maybe they get lucky. Maybe they hit a good string of winning trades. They get into the funded stage. They have no idea about risk management or how to manage that amount of capital, and they quickly lose their account. The second is traders who maybe have a strategy, who have been working on an edge. You know, they're able to kind of read price action. You know, they have some winners, they have some losers, but they're just trading too small of size for the particular amount of time that needs to be done, I think, to pass these evaluations. So there's two baskets, right? If we can look at these two, different sides of things. If you're new and you're brand new and you're trying to figure out a strategy and you're trying to work on your discipline and you're trying to work on your risk management and you're trying to learn how to trade, I definitely think that you need to take the slower approach, okay? Not try to pass in 30 days. If it takes 60 days, that's fine. If it takes 90 days, that's fine as well. What I want you to do, if you're a new trader, meaning you're fresh, right? Like you barely know what the difference is between going long and going short. Like that's how fresh I'm talking about. Like you just learned about supply and demand. Those are the traders that I'm talking to. If that's you, definitely stay over on this side and take your time. What you need is experience. What you need is a lot of trades under your belt. What you need is to sit through choppy days. You need to sit through days that just are trending all day from the jump. You need to see days where we have a big spike off the open and then the market pulls back down and then V-shape recovers. You need to see different type of scenarios so you get comfortable with the overall kind of working mechanism of the overall markets. That's fine. So take 30 days, take 60 days, take 90 days. You're going to highly benefit from that. Now, let's get over to the people where I think a majority of you guys are at, where you have a strategy, you've been trading for quite some time now, maybe even 6 months, a year, 2 years, 3 years. You just haven't found success yet. You understand basic market structure, you understand technical analysis, you understand the basics, and you've been taking trades and you've been taking these prop firm evaluations, but you just can't pass yet. That's who I really want to talk to. Because those traders, I think, are going about it the way that a fresh, brand new trader should go about it. So what you're looking at here, and I'm going to use a very quick example. Let's say, for example, you're trying out to pass a $50,000 funded account challenge. You have $2,000 or $2,500 worth of drawdown depending on the firm. What you're trying to do is manage that $2,000, $2,500 so you don't blow up. But realistically, how much did it cost you for that prop firm evaluation? So what I want you to do is kind of shift your mindset to, I don't want to lose 2,000. I don't want to lose 2,500 because that means that I'm no longer a good trader. I don't really know what I'm doing. Maybe I should look at something else. What I want you to do is look at your risk management on how much did you actually invest into that challenge. So a lot of you guys who are trading futures, most of you guys use Top Step. It's $50. Okay. Most of you guys use Apex Trader Funding, which you can get accounts for like anywhere between $15 and let's say $30, right? When they're on sale. That's your risk. That's how much money that you're actually investing into the markets. That's how much money you're actually going to lose on this particular trade or on this particular week or however long it takes you to lose that account. So what you need to do is, if you have a strategy, you understand some basic risk management, because that risk management is going to change once we get into the funded stage. We're going to trade these completely different in the evaluation stage. Now, again, don't get it confused. If you're brand new and you're just starting off, I 100% would recommend to start with super small size and take as many trades as you can and let it take as long as it needs to take before you can pass 30, 60, 90 days. But again, if you're not there and you kind of have a basic understanding, in order to pass these evaluations, you're going to have to put a little bit of risk on the table. I would recommend anywhere between 1% and 2%. And if you go on a string of losing trades, you lose 2, 3, 4, 5 trades in a row, yes, you could lose your account. You could lose that evaluation account. But you need to understand you're only losing anywhere between $20 and $50. So most traders who are doing this on a day in and day out basis, we lose $20, $30, $40, $50 in one trade in one day. That could be happening in 2 minutes, right? So again, don't look at it as it's a big deal, because the whole deal is to get into the funded stage. Now, a lot of these prop firms request you to make like $3,000, $4,500, $1,500 before you can get into that funded stage. So the risk management, once you're into the funded stage, needs to be managed a little bit different than the evaluations. We're not going to go and put 1% to 2% up once we're in the funded stage. How we're going to trade that account is all the way back to as if you're just starting off, where you're taking a bunch of trades. You're risking very, very minimal amounts. You're making $50 here. You're making $100 here. You're stopping the day down 200. Because that's what's going to allow you to keep your funded account. And it's also going to allow you to take payouts. I'll get to that in another video. I teach a lot of that on how to manage these funded accounts once you're in Evolution Traders, which is my online community and mentorship. But if you're risking, let's say $250 or $500 a trade, and you know what you're doing and you have a strategy, essentially all you need is somewhere between 5 and 8 or 5 and 10 trades before you pass that evaluation or you lose that evaluation. Because remember, when you're in the evaluation stage, it's all about getting to the funded stage so we can now really manage our risk. Now, some of you guys may be thinking, well, you should trade the same way in the evaluation as you do in the funded stage. That's completely wrong. We don't want to waste time. Again, there's two baskets of people. If you're new and you're just starting off, yes, 100% take as much time as you need, because you need that repetition. You need that market experience. But if you're someone who, like, let's say for me, for example, I've been in the markets with real accounts, with personal money in the markets, trading options. I'm not going to sit here and take 90 days to potentially get a $50,000 evaluation funded. There's just no incentive for me. There's no, it's a waste of my time to sit there and take that amount of time, 60 days, 90 days to pass, because those are missed opportunities where I could be making money on my strategy that I know how to use, if that makes sense. So what you want to do is go out there and risk $250, $500 a trade. You want to build a little bit of a cushion, and then you want to pass these things extremely quickly. 7 days, 10 days, 5 days, 4 days. You want to be in that sweet spot. You want to get to where you can make $3,000, $2,500, risking more than you should to get into that funded stage. Now, once you do get into that funded stage, we pull the risk all the way back. And this is what's going to make the prop firms absolutely hate you, because what they want to see you do is continue to trade the same way you were trading in that evaluation. Because if you do continue to trade that same way in the funded account that you traded to pass the evaluation, you will fail within 2 to 3 weeks. Why? Because sometimes the market just does those things where we get in this run where we have 2 or 3 days worth of chop and you just can't get nothing going. You can't read the markets. Sometimes, the market just doesn't perform the way you think it was going to perform, and risking that amount of money is definitely going to blow your account very, very quickly. So what you want to do once you do get into that funded stage is dial your risk all the way back down. 1 to 2 micro contracts on the future side of things, risking no more than $50 to $150 a trade. I would keep it in the range of around $50 to $125. I like that sweet spot, because that's going to keep you in the game. And when you make somewhere between $50 and $120, $150, you absolutely stop trading on the day. And instead of telling yourself, well, I just made $3,000 in, let's say it was 7 days, right? You do not take that mentality into the funded stage where you tell yourself, well, if I can make another 3,000, that's pretty good on this one account. No, no, no. What you want to do, my friends, is try to aim to make anywhere between $500 and $1,500 per $150,000 account. That, my friends, is going to get you paid 100%. And if you want to make more money on top of that, all we have to do is scale by adding more funded accounts. So it's not about taking one funded account to $3,000 or $5,000 or $10,000 on the month. It's about taking one account to, let's say, $500, $1,000 in profit, stopping that account, trading the next funded account, making another $500 to $1,000. Now you can see how that monthly income is going to start to jump, and you want to get it up to 5, 10, 15 of these accounts where you have multiple accounts running all at once, where you're just taking out small pieces of the pie out of each and every single one of them. So if you're having trouble passing these prop firm evaluations and you're an experienced trader, you're seasoned, you have a strategy, you know what to kind of look for, you've made some money in the past, you've won some trades in the past, you need to increase the risk. I understand that there's a big probability where you might lose that account trading this way, between 1 to 2% on that account size. However, you have to look at it as this. If you fail a $50,000 account, you didn't lose $2,000 or you did not lose $3,000. You lost whatever amount you invested into that evaluation. So unless you're very, very strapped for cash, okay, which I don't recommend anyone who's strapped for cash to be trading anyways, because this is not a get rich quick kind of industry. But unless you're really, tight to the vest with the money that you do have, just look at your risk in terms of how much did that evaluation cost? Was it $25? Was it $50? And personally, per account, per evaluation, per trying to get into the funded stage, I would put up like $150 to $200 total in hopes to pass just one. If I pass 2 or I pass 3, that's fantastic. I have intentions of losing 2 or 3 along the way, but if I can just get 1 or 2, my odds and probabilities of actually taking a payout are very, very good. So look at, for example, even if you go with a company like TopStep, which their link is down in the description box below. Let's say you go out there and you buy 4 combines, 4 evaluation accounts. Your total cost is going to be somewhere around $200 to get started. Now, if you pass 2 of those accounts, it only costed you $50 of initial investment. Now you have 2 funded accounts where you can work very, very slow, practicing good risk management and taking these little $50 trades here, $100 trades here. Some days you get lucky and the market's just running, you make $200 or $300. You allow those 2 accounts to continue to stack and to continue to grow. And at the end of the month, when you have $1,000, you have $1,200, $1,500 in profits, don't look at it as a missed opportunity or a failure. Look at it as you just made $3,000 combined with the 2 accounts, where you can take a nice little payout, right? You can take $1,000, you can take $1,500, you can take $2,000 of that out and pay yourself. And when you pay yourself off those initial accounts, you go out and do the same thing again, where you go buy 2 or 3 accounts. Now, TopStep's only going to allow you 3 accounts. There's other platforms, there's other brokers out there, there's other prop firms that'll allow you to have up to 20. We can talk about them in another video, but there's multiple ways to get funded and scale the amount of money that you can make. Look at it that way. I hope this video helps you guys. If you guys want help and you guys want to actually learn how to pass these things and what strategies work and what doesn't and what your risk management should be, and you guys want to trade with me, maybe you guys want access to the coaching and the mentorship, maybe you guys want access to my watch list, my pivot levels, you want access to the online community to talk each and every single day with traders who are trading live every single day, join Evolution Traders. That link is down in the description box below. I have one more space available going into 2024. I kind of want to close the room so we can get situated and get ready for 2024. Take advantage of that. It's down in the description box. Everyone else, like, comment, and subscribe, and I'll continue to make these videos showing you guys how you guys can gain the edge on these prop firms and pass the smart way. Okay, I'll catch you guys all next time.